I usually don't shoot a quick intro, but we have the ability to put some VA buyers that are in the 700 FICO range into 5.8 when everyone else is at 6.2, including our own investors at 6.2 and 6.1. Details are in the video. Just check it out. It's like halfway through the video. All right. Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today is your weekly update for November 17th, 2023. Now, next week is Thanksgiving. Thanksgiving is always a week that has less volume to it. Well, less volume means less demand on cash. Typically, that means lower rates. In fact, historically, I brought this up a month ago, rates tend to go lower for the year in November, hold through December and January, then they tend to go back up in February. So we're seeing that again this time. So we talked about it a month ago. We're seeing it right now. And I'm going to show up this chart. It's actually over my left-hand side too for this entire video, but we're going to pop open a chart and it's going to show you how rates are trending. They're trending down. So if you're a realtor that had a borrower that bailed out because of higher rates and higher payments, it's time to have that conversation to bring them back on board. You might be surprised. You might get a deal or two or three, maybe 4, 5, or 6 in December. Who knows, right? With that being said, we have a lender that we're an investor, and we use this investor for VA IRRRLs, VA refinances. And if you're not familiar with a VA IRRRL, it's a 2-week process, no appraisal. It's just pushing some paperwork. You don't actually qualify for it, and you get a lower rate. This is why on VA, we typically tell most buyers on VA, don't buy down the rate. Why? Because when rates come down, you can do an IRRRL, and the IRRRL's cheap. It's title insurance. If you're disabled, it's just title insurance costs, right? And a few other small fees. It's nothing big. But anyways, we have a lender that wants us to send them purchase traffic that we have currently set up on the VA IRRRL side. We haven't sent them purchase traffic. This is what they're offering. So right now, let's go through rates. Okay, conventional, you are high 6s par right now. It's pretty good. High 6s, maybe low 7s depending on the your credit score. But par means no origination, no discount, right? FHA, 6.3, VA, 6.2, and actually you're a little lower than that. 6.1 with a little bit of money, just a little bit. We're talking a few $100s. Same with FHA, 6.3 to 6.2, you now go 6.2 and a little bit of money and you're there. To put that into perspective, this investor wants our volume, sees our quality, really likes what we're doing, and offered us a deal, and that is the following. When everyone else is 6.2 and 6.1, they're going to be at 5.8. Yes, 5.875 on a VA deal with zero origination and a few $100s of discount. So they're basically making the play of, we're going to beat everyone by half of a percentage point. We can do a good job, try us out. So here's the deal. If you have a buyer who's VA with a middle, low, anywhere in the 7s FICO range, right? And they have 3.5 weeks on the contract, send them over here, and we're probably going to be able to get them into a deal that's 0.5% lower than what we're seeing on our interest rate charts and also what we're seeing with most of the other investors. They're doing this, they're giving us a special price incentive for a month or two because they want us to send them volume. So of course, we want to take advantage of it, but we only want to do it if your purchase contract has 4 weeks in it, at least 3.5. That way we know if there's a problem or a hiccup through that process, we can pull it, send it to one of our fast investors, and then they're done in a week and a half. So regardless, if you've got a buyer and they want a really good smoking VA deal, send them over here. We'll get them a quick pre-qual. We'll make sure it works within that confines of that new investor. If it does, we'll let everybody know, hey, looks like we're good to go, and then we just push forward with it. Other than that, rates are going to keep downtrending for a while, most likely, unless some bad news comes out. I don't see any bad news happening. Most people in the mortgage industry are going to take this week off, believe it or not. Most of your operations staff or most of your lenders. We proactively knew this, so we set no closings up for this next week unless they were clear to close, last week. So I think we have a handful of closings, but we don't have any work that has to be done on files to close the next week. Everything's clear to close. But also proactively next year or even next month into December. So next year when you're planning for November or right now planning for December, you need to know that the mortgage industry, they don't get much time off. So whenever there's a 3-day weekend or like Thanksgiving, a 4-day weekend, most of that operations staff is going to turn it into a full week off, like most companies and most people. But it hits the mortgage industry hard, especially with realtors that are trying to close deals and buyers that are trying to close deals that last week in November. So you got to be very careful. Last week in November closings, you should have your clear to close already. If not, hopefully it's on the 30th where you have, several days there to get your clear to closes out. Anyways, Mike Florin, enjoy the next few months. Rates are going to be low, or hopefully they should stay low or tend to be low unless some really bad information comes out. But yeah, talk to you guys later. Have a great week. See ya.